Alrighty, good morning, everybody. Want to do a quick mic check, make sure everybody can hear me okay. Very good. Also want to double check and make sure that my YouTube is working today. I know yesterday I recorded but didn't have any sound going into it for some reason. So I just want to double check that, make sure it's working, which it is. So, very good. All right, so where did we leave off yesterday? First of all, my name is John Novak. For any of you guys who are new, I'm the one who wrote the software. And what I want to do today, we're going to go through the basics again. It never hurts to cover the basics, and then we're going to go through some of the things that we went through yesterday as well. I mean, it's basically the same thing every day, isn't it? So first thing I'm going to do, pull up the user guide. And in the user guide, we've broken it down into sections. The easiest thing for most people to if the microphone's low, I don't know what to say. Maybe turn up your speakers a bit. I don't know. I think I've got it up all the way on my side. So if it's a little bit low, turn up the speakers. How's everybody else sound? Does it sound low or does it sound right? Good. Okay. Look, the trigger lines are one of the easier things for new users to really get. Very visual. Obviously, it's going to tell us direction of the market. It's going to tell us how much momentum there is in the market. And, when we're doing trend trades, this is the look that we want. We want to see wide triggers, wide small triggers up, wide large triggers up. And, we spent a lot of time yesterday talking about trend trades and obviously trading with the direction of the triggers. One of the things that we did yesterday, which I always find this an easy exercise, is I went into the indicators. So just basically right-clicked on the chart, went into indicators, and in the T3 trigger lines, instead of making the large trigger line bigger, I just made it a 1 instead of a 1.9. And essentially what that's going to do is it's going to plot only the small trigger line. And it's not that I only want you to plot the small trigger line, but as far, we're going to spend a little bit more focus today on the small trigger lines. And, again, whenever you're struggling to say, should I be going long or should I be going short? You guys can't hear me? Really? That is not good. You guys can't hear me? Okay. All right. Ooh, scared me. Okay. All right. Good morning. Is it Monday? It's not Monday. It's Tuesday. Anyway, look, long story short, this all right. All right, guys, I turned off my mic and turned it back on again. Maybe that'll help. Okay. There we go. I'm just going to type this out. For those of you without sound, not that you can freaking hear me. So anyway, I typed it in. Hopefully you guys will work it out. I want to double check one thing real quick just to make sure. I don't think there's any I don't think there's any reason why. I'm just looking on my end and I don't see any reason why there's no sound for anybody. Okay. Worst case scenario, I did put it live on YouTube. So if for any reason you guys can go watch the YouTube. Worst case for sound. All right, so just to make sure that you guys are go to your settings down here at the bottom, and then make sure that your sound settings are correct, unless something maybe have changed for you. Anyway, we're going to move on. Hopefully everybody either gets into the YouTube or... There we go. All right. They'll figure it out. All right. We're going to move on. It's not Monday. I guess now it feels like a Monday, but this is crude oil. And, you know, again, when we talk about reading our charts and we talk about what should we be doing next, what should we be thinking next, there's some key factors or key things that happen on your charts that literally you can't, you know, we call them termination conditions. You know, there's two different types of termination, if you will. There's termination as an area that will make you stop taking trades. Okay, so, you know, there's two things. Number one of them will stop making you take trades, and then the other, you know, a termination area, I guess I should say, will make you stop taking trades. A termination condition is kind of, you know, more after something has happened in the market. And there's a couple of key termination conditions that we deal with. You know, and I like to draw boxes on areas of major importance. And, you know, again, when we look at a termination area, I want you to think about it in a couple of different ways. You know, bear with me here. Watch. I'm going to take a picture of this. And, you know, in this picture, when we reach Fibonacci resistance, at the very first time we reach resistance, right? So we don't know. right? I guess so. This is the easier way to put it. You guys understand this? So when we reach an area, we say, okay, it's a termination area. And because of the area itself, we're not going to do any more trades. And the difference between, this is the same Fibonacci line, but it's a considerably different trigger. So it's the same fib line, but, right, so one of them is, this is the area where you stop going long. So, again, let's see if, I don't think I have them in here, but anyway, I think I'm going to make this fancy here. Hang on a second. We'll call it Traveling Places. There we go. So this is the spot right here where we're going to stop going long. Does that make sense? So, and again, whenever we hit a resistance, we have to say to ourselves, hey, we're going to stop going long. We're going to evaluate going short, going long. Is it going to break out? What are we going to do with it? And basically, you're just stopping whenever you reach a termination area. As far as trading or, getting started trading, over here, this is a totally different condition where we can start looking for short trades. And I would like to, we went through this yesterday quite a bit, and I think it bears repeating. The small triggers on your large chart, regardless of what market you trade or whatever your large chart is, if it's NASDAQ or anything else, it doesn't really matter. You want to make sure that you have the Fibonacci and the trigger lines that line up with each other. So for example, when I look at this chart, this is a Fibonacci line and the small triggers that line up with each other. Right? So this is a spot where we might see a trade, right? If you were going to take a trade or do something long. This is the spot where you would stop doing trades. And then ultimately, as we start working our way down, we have resistance, the small triggers roll over. This resistance is much more significant. And there's two things that we deal with a lot in our termination conditions. And when you see them on a larger chart, it works just as well. But one of the termination conditions that we deal with is any third divergence in the same price area, general price area. And whenever you see this on a larger chart, again, we've got one divergence over here, we've got two divergences over here, and we've got a third divergence over here. I'm going to go a little bit further and say you don't even have to worry about the first divergence. This second divergence right here is enough to tell us, number one, the fib and the small triggers is enough to tell us that it's going to be a pretty good top. But what that means for you is that as we start to trade down, you want to find a short trade as quickly as possible. And, ultimately, we make it almost down to a fib, not quite. And you'll see this happen a lot when we almost make it to a fib area. So let's just say that's your fib area and the market decides to go back up. Again, you're going to see the same patterns repeat themselves all the time. So I want you to really, really, really keep in mind this one. A second lower divergence generally means you're going to have an extended trend in the other direction. And the more you study this pattern, the more you're going to see it. And what happens is, eventually, they almost make it down to the fib area, they come back up, and then we have our, another termination condition for us that's a very powerful termination condition. And this one's called a pivot stop out. And, you could even call it a divergence pivot stop out. And there's two pieces to it, right? So the first one is you have to have divergence on your larger chart. So, or a pivot, right? And that's this little -9 number. A lot of people are going to ask, what's the difference between a 9 and a 30? It doesn't really matter what the size of the number is. I actually debated at one point just making it plot DIV instead of the actual number itself, because then it would just be divergence to you and you wouldn't try to attach meaning to the number. So think of it as pregnant or not pregnant. And whenever you have divergence, that's, it's something to watch out for. But the small triggers were up, so we're not really going to do much with it. And what happens is after they retest that area, basically a double top where they stop out the little divergence high and start going back down, now we can resume the trend as the small triggers start to roll down. And again, we ended up making it to all the fibs. And, again, when we get to the fibs, it's a termination area, but it's not a termination condition. So we may stop going short, because look, this is what it's going to look like in the real world, right? When you're looking at it from the perspective of a live chart, right? We're going to get into fib support, and then, we want to always ask ourselves the question, did the trigger lines break through that support? And the answer is no. So that's going to basically tell us we're going to stop taking short trades, even though it went down. And, again, it can go down without us after a termination condition. And, again, there's some instances where you may say, hey, it's worth trading into a termination condition because of XYZ, larger charts or prevailing trend of the market or something like that. But for the conservative, side of things, we're not going to do that. One of the other termination conditions that we get to a lot, and again, they overran this one a little bit, but they made divergence after the overrun. And anytime you see a termination area, fibs, pivot stop outs of divergence lines, 1-to-1s, and they include divergence. Did you guys get that list of videos that I put in? I'm going to put it in again here for you. But in this list of videos, I put in here for you guys, there's one of the videos that I did, which is teaching good tops and bottoms and use cases for divergence and when divergence is important. And it's not only large chart divergence, but small chart divergence that helps. So we're just looking at the large chart here at the moment. But whenever you have a termination area that is combined with divergence and the triggers roll, you end up getting trades in the direction of the small triggers. And again, I don't need to see the large triggers here, but in all of those videos, it's the same thing. What happened before the triggers got strong? And again, you'll see the same pattern if you ask that same question over and over. Before these triggers got strong to the downside, what happened? And we had another one of these pivot stop outs of a divergence line, which again are very, very powerful termination conditions for us. And they're more powerful when not only do we get the condition, but then we have strong trigger lines after it. And anytime, this is probably one of the most difficult things for new users. I'm going to take a picture of it. Bear with me. One of the more difficult things for new users is they're going to say to themselves, and tell me if I'm off base on this because it's been a while since I've been a new user, but whenever you're thinking about going short here, you're going to ask yourself, why would I trade into support? Right? And again, this is where people say, well, I didn't take the short because I was too close to support. Or I didn't take the long trade because I felt like I was too close to resistance. Have you guys ever said that to yourself? And again, whenever you have a termination condition before, you can usually trade into an area once, and then if it keeps going, great. And then ultimately, if it breaks through, we can keep taking short trades. So when we're looking at this chart right now, look, it's incomplete. Because we don't have all of our triggers. And, what we need to do is we need to incorporate the small chart, because you can't see change happening on a large chart. And whenever we say you can't see change happening, what that means is, the one bar on the large chart, and again, I'm going to take a picture because I like to lock things in here. Right? If you were only looking at your large chart, you would say, I want to go short, which was the right idea when the rules were met right here. And again, we'll go through trend trade rules one time and we'll make sure. But again, what you can see is that even though the large chart's going down, the small chart gave out. And when I say gave out, I mean we had divergence on the low the first time, which is not really a big deal. And then we had divergence and a pivot stop out, and then we have divergence. And then remember the pattern I told you about up at the top? Divergence with a higher pivot, and that's usually what's going to end up making the market go all the way back up to, some form of resistance, probably up in this area would be my guess. And then we have to kind of start the process over again. So you get an opportunity, if any of you guys are trading crude oil, I'm going to assume you took some type of short trade and then ended up not getting all of your money out of it. But this is what we're talking about. A lot of people say, I'll just trade the large chart. And the problem is you can't see change coming inside of one bar in a large chart. So that's why you have to incorporate the small chart. Now, not saying we won't go down or can't go down, which we can. But remember what we were talking about is one of our minimal rules for doing trend trades is we want to see our small triggers either strong up or strong down. And right now you can see that although the triggers are kind of far down, they're not crossed down strong anymore. Which brings me back to a picture that we went through yesterday. You guys remember this? We did this picture. It was from a tutorial I did way back in the day. I think the date on it was 2015. And it talks specifically about the location of the bars relative to the triggers. And as you guys are watching your 13-2 chart or your larger NASDAQ chart, you'll see this happen a lot. Price bars, and I'm saying the body of the bar, the body of the candle, the location relative to the trigger line is going to be very important to you. The farther below the trigger lines the bodies are, the higher probability that the market is going to continue. Once the price bars themselves, and again, this is a very old picture, I can make a new one, but it still works, even from 2015. Once the bodies of the bars get on the wrong side of the triggers, then you can start to anticipate some type of retracement. And again, this pattern repeats itself literally all the time. Bodies below, bodies inside, bodies above, you get a retracement. Not that it won't keep going down, but anyway, that's how you start to see a retracement happening. And when you look at crude, this is crude oil. You'll notice over here, the bodies of the bars are below the triggers. And then ultimately, as we start to reach down here towards the bottom, you see where the bodies of the bars are? Sophia, can I explain drop here? What do you mean drop? I'm not sure what drop means. I know what drop means, but I'm not sure the context in which you're asking. The image I just showed, All right, bear with me. Where the heck did I put it? Yeah. So what I was saying is that if the trend was down, even though, we were talking about a retracement, so you can start to see a retracement coming. So the bodies of the bars are completely below, the bodies of the bars are above the down triggers, and then you get a retracement. I think I said, but eventually the market continues to go down or drop, the trend resumes, whatever. Is that what you were talking about? Just to make sure. So, and look, I like to look at it in the context of this chart. So, again, we were looking at with our crude oil chart, and again, I think we need to spend a lot of time reading the bars and reading the charts. And when you see down bars that are below the triggers, you're going to expect more to the downside. And, again, as I was saying, since the bodies of the bars over here were getting above the small triggers, this is where the small chart has a lot more sway on what happens whenever the price bars are on the wrong side and they start to weaken. And this is where you start looking at your small chart and you're like, this thing may not go down any further at the moment. And then what I said was, however, this area is going to be a significant area for us one way or the other because, again, just looking at your chart, you can see that we have a whole gaggle of resistance here, right? Fibs, mid bands. So this is the type of area where potentially if they were going to start going down again, that would be a good spot for it to happen from. I don't know if it will. But that's where potentially somewhere in this area, does that make sense? And I don't know if it's going down, but again, a lot of times when they break through and then they make a bigger pullback, they're going to pull back to resistance. And then ultimately, you can kind of pick where they're going to go. Assuming they roll over and go down, then they're going to go to the next fib. Can I put here in the Discord chat? You want that picture from 2015? Bear with me. It's an old picture. I've got the same information in other pictures, and bear with me. There you go. To add to the collection. No, not at all, Jose. Explain to me this divergence. Where did it happen from? I mean, it could go up, sure. But, again, when you have to kind of step back and look at the roadmap of your market. So, again, divergence made the market go up a lot higher, but then it resumed the downtrend. So if there was no divergence on the chart, Jose, so again, I'm not saying it can't go up, so let's, I don't want to confuse anybody here. At the moment, it doesn't matter what happened at the bottom. It only matters what happens right here. Right? Everything is right now, right now, right now. So right now, we're at resistance. Can we all agree to that? There's a magenta midband. There's red lines of resistance. When we're at resistance, we have to say, where are the trigger lines in relationship to our resistance? Yes, they're up, but they're below the resistance. So what we're waiting for is one of two things, and I don't care which happens first. We're waiting for a breakout of resistance, which would be fine. I don't care if it goes up or if it goes down, nor should you. but we're waiting for a breakout of resistance, or we're waiting for something to tell us that the small chart's slowing down and that we might be going short, which doesn't look like it's going to happen anytime soon. Which means you're in wait mode at the moment. So you're at an area and it's a pretty area and all that good stuff, but there's no conditions to work on. So let's talk about conditions. And right now we're at a termination area, but we don't have any conditions yet that tell us that the area is actually going to hold. Does that make sense? So we're kind of waiting for things to roll over at that spot. And basically what we're going to be looking for, in short version, is we're going to be looking for a top or a bottom to hold, right? And again, you guys, this is the same type of situation here. The market's going down and it hits support, and we don't know if support's going to hold forever, if it's going to break eventually. So we stop going long or short at any type of area. But this is the key for new users. When you hit a fib, you have to ask yourself one question, and it's very simple. Where are the trigger lines? It'll answer all your questions. Should the fib hold? Should it break? Where are my trigger lines? And again, just using crude oil since it's up, we have resistance and our trigger lines are below it. So at the moment, resistance may very well hold. Now, do we want to go short? Again, remember what we said about the small trigger lines, right? We basically want to take short trades when the small triggers are going down. So this puts us in a situation where the triggers are going straight up, but the resistance area is down. So something has to give in this area, whatever it is, right? Something has to give. Either the resistance has to break and keep going up, or things have to roll over. Does that make sense? All right, G, let's see what you got. G is in Gary. I can tell by the charts. All right. So I see what you have here. I don't see a trade. Did you go long, I'm assuming, over here somewhere? I'm kind of having to guess here. All right. So without any chart markers on your chart or arrows or anything, this is just a picture and this is just bragging. I'm not picking on you or anything, but it's just bragging that you did it, which is nice. And again, look, I want it to be pretty simple for new users, and I want you to understand what did Gary do here. And I have to guess because obviously there's no arrows here, but I'm going to take a wild guess, and you guys can guess with me, but we had divergence at the bottom, and then eventually the small triggers were breaking above fibs, so he probably went long and got out at resistance. Is that right, Gary? I'm assuming you bought over here somewhere and then got out on the way up into resistance. Now, for new people, does this make sense to you? Forget about rules. Forget about anything else. His small triggers are going up really, really, really strong, and he bought a little pullback to support, and he got out at resistance. How about everybody else who's in here? Do you guys understand this? I mean, this is all you're looking for. The triggers to be going up really strong and buy some support, get out at resistance, and hope for the best. Chart markers are on now. Okay. I already know what you did because I could see it, but all right. So does everybody understand it now? Here, we'll just I'm going to use it again. And you guys, look, if you have trades, put them in. And again, I want you guys to say yes, no, maybe, I understand, don't understand, because look, I want to make sure you guys get it. But again, look, the visual on this. This is all, if you're brand new to our software, don't make it difficult in any way. Okay, you just want one look. You want strong small triggers, really, really strong small triggers. You're going to buy a pullback and you're going to get out on the way up. And again, maybe he left a little meat on the bone on this one, right? Because look, if you guys were small trigger reading and you said, I'm going to stay in until I get a little further along to a profit target if the small triggers remain strong. So again, he made some money, which was nice, right? There's nothing wrong with 10 points on the NASDAQ. That's $200. And again, perhaps he could have taken a little bit more money on that second trade. And you can see ultimately it went up to this pivot stop out, which is our termination condition. Anytime you reach a line, look, I want you to see the specificness of this. Not that it can't keep going, but do you see how we reach this magenta line right here? Answer one question and your whole life is going to be super simple with our software. How many trigger lines are above that pink line? And when I say triggers, I'm talking about these two small triggers and the two large triggers. So there's 4 lines total. How many of them are above the pink line? None. So this means stop going long. Not that it can't go up, but for what we do, we're going to stop going long until the market proves itself. And that's all a termination condition is. So when we're looking at, when you're looking at this in the user guide, termination conditions, any indicator that may reverse the market based on trigger strength and location. Now, let's go back to his trigger line strength. His strength of the triggers is strong. Can we all agree to that? I mean, the small triggers are still going up. The large triggers are still going up. So it could break through and just keep on going. I don't know what's going to happen. But it's strong. So we stop taking trades and then we wait until the triggers are like this again, either through that area or if it holds and reverses, going the other way. And that's all you're waiting for. All right, so let's look at our crude oil. And again, we already knew that this is an area for us. Everybody agree? So we know it's an area, we're watching it, and this is where the smaller chart starts to come into play, because the smaller chart's going to tell us before the large chart that the area is going to hold. So at the moment, right, as we were going up into this area, let's just dissect it together, okay? As we were going up into the area, these small triggers are very, very strong over here on the small chart. Everybody agree? So we're not going short. And as we continue to look at this, we can see that pretty clearly, the large chart small triggers are still strong. So there's nothing to do yet. They're battling it out at an area. And could they keep going up? Absolutely. Now, there's no reason to go short because, again, to go short, we'd have to have all of our trigger lines rolling over, which isn't happening. So when it doesn't happen, it's just not going to happen. All right. I want you guys to put trades in today. That's good. So Dual, let's see what you got. So you had the short. Let's do it this way. Which I think is perfect. I think you did an absolutely perfect job of going short with the trend trade, with everything going down. So you got in one and you got out of some and you took a quick profit. And then ultimately, after the third divergence and the small triggers are starting to roll up, you said enough is enough. We're probably going to go higher because the small chart gave out. Ended up taking a profit, and then that's it. So you did that 100% perfectly. Literally perfect. Jose, when you asked the question, wouldn't you take the long in that retracement without divergence? What if I would? Did your life change? What if I wouldn't? Does your life change? It doesn't really matter what I would or what I would not do, because it doesn't pay your bills. What would you do, Jose? That's the question you have to answer. And again, look, we knew it wasn't going down. The question is, do we want to go long into a bunch of resistance? So, Jose, look, if you were to go long, this is what you're trading into. You're trading into a bunch of resistance. How do you know it's going to break? At this moment in time, how would you know this is going to break? Look, I want to be fair about this, because it's always easy to go, oh, you could have gone long here, but I want you to read your software at this moment in time. So this is where you're talking about going long, right, Jose? I'm assuming. So the question is, and look, I want you guys to answer it, because I think when you answer, how many triggers are above this fib? You're saying the first one? All right. So, Jose, let's answer the question here. I could do this all day long. How many triggers are above this fib first? And then number two, are the rules met for a long trade? So, again, you know, this is where everybody has the whole hindsight 2020, which is really, 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 really something that's going to kick your ass. So look, in the moment when you're looking at this, right here, Jose, you're talking about going long into resistance with only half of one of the trigger lines above it. Is that what you're telling me? With only half of one trigger line above it, and this trigger line below it, and this trigger line well below it, this is how everybody loses all of their money. You don't go long into resistance when none of the triggers are physically above it. You can, but you're going to end up losing. They're going to run up, and then eventually, we'll see what happens, but now, the other thing, Jose, is I don't think, honestly, any of the rules were met for a trend trade. Because, let's just take a look. Let me put the indicators back on. And I'm going to go through the rules for a trend trade first, so that way we're all totally cool on the same page. Because there's a big difference between trading what you think might happen and what's actually happening. So look, when we superimpose this large trigger on top of this chart, right? And I think this makes it easy. So Jose, one of the rules is both of your triggers have to be crossed up for a long trade. So at the time in question, your large triggers, these 13-2 large triggers were still crossed down. So that pretty much negates the rule. Unless, of course, you know, and look at the difference over here where the prior short was. See how the 13-2 large triggers are down right here? That fit the rules for a trend trade. So let's do this real quick. Let's go through, and again, over here, it didn't fit the rules for a trend trade. I just want to make sure we're cool on this, okay? And again, the market can go up and down without the rules being met. Right? And that's really what we have to do, is we have to differentiate between the two things. Whenever the rules aren't met, do we want to take a trade? All right, so first things first, rules for new people. The rules are really simple. If you haven't done so, go through the trigger line section in here or in the Discord. And trend trade rules are really simple. This is the look you're looking for, period. Both triggers up, wide, strong, that's your trend trade. That's the trigger line look that you're looking for. If you don't have it, you don't really have a trend trade. Everybody okay with this? The triggers have to physically be both of them up and both of them strong, and that's your highest probability trend trade. Not saying that there's not other trend trades, but this is the one where, for new people, we really want them to start out. Then, when we talk about entries, you know, this is where, again, you know, I love this chart because this chart shows you exactly what you need, and you don't even really need the large chart to see it. You have to have the larger chart, large triggers up, and then you have to buy a pullback at some type of support with the large triggers helping. That's basically all it boils down to. So as the market starts to work its way down, you're going to buy inside of support on the way down. Jose, what you were talking about is breaking the rules because you wanted to go long without this rule met, which is okay. You can make another rule, but it's not the rule. And this is what it looks like at the time of entry. As we pull back in price into support in between the large triggers, that's where we're going long, with the hopes that support and the large triggers is going to make it bounce up. Everybody okay with this? So again, just think, area plus large triggers equals a trend trade. Area plus the large triggers equals a trend trade. So, Jose, in this situation, and again, you'll be able to see this, you know, and again, it's really a lot about patience. So look what happened. Eventually, with our large triggers, you know, look, this was our resistance. And again, you'll see that our large triggers never got above that resistance, did it? So they ran up and they messed around, and now we should basically resume the downtrend. Potentially, anyway. So again, look, let me ask you a question. What happened up here? And again, this is where you start to work on your chart reading quite a bit. So not only did we have divergence on our large chart, we also had a pivot stop out, double divergence on our small chart. So I want you to look at the large chart from this perspective. Remember when we got to this fib the first time and we said the triggers are up and they're going to have to work it out? It's the same fib area over here. Watch. This is the second occurrence of this that we were talking about. Now, we literally are going to be at the line in the sand right here. Does everybody see that? And again, I don't know if it's going to break out and keep going up, which it could. But as long as we stay below this window, there's a potential that if that window holds, that we'll end up going down to here. Do you guys see why I say go down to here? Because that's the next fib support. I don't know if it's going to happen or not, but we'll see. Okay, you guys just keep rattling off trades. I'll be more than happy to look at them as we go. All right, so this is NASDAQ. Okay. I'm blowing it up so you guys can see it. Does everybody see what happened here? Again, look, I'm going to point it out for all the new people, okay? So number one, what happened before, I forgot whose chart this was. Whoever this was, look what happened before they decided to go short. One divergence, lower divergence, and then all the triggers were going down. And again, I think this is a really important exercise for you guys. So before there was ever a short trade taken, there was divergence, then lower divergence, then it's yours, Eva. Okay. So divergence, then lower divergence, and then small triggers down. And then, only then at that point in time, did Ziba look for some type of pullback at resistance inside of the large triggers. Now, potentially could have made a little bit more money, but opted for quick profits and to be done with it. Can we go a little further with this picture? I know it's a little bit blurry, but looking at this picture, when you look at the strength of your trigger lines right here, here, this is the video. There you go. I'll get you there. So again, look, I know this is a little bit blurry, but look at the strength of the trigger lines right here. Whenever you're deciding, hey, should I hang on for a little bit more money, maybe at least to the first line on this chart. Whenever your triggers are that strong, just relax for a minute and put your target at a line and you'll end up making a lot more money. Yeah, it's okay. But look, if you're going to put yourself at risk, make a little bit more money for doing it. Especially when you have divergence, a second divergence, and strong triggers, you're going to make at least 10, 12, 15 points. So don't shortchange yourself. You know, you put all that effort and time and you have to kind of relax a little bit and let it marinate. All right, so crude oil is messing around, but now we have something that's very interesting. Can you guys tell me what it is? The same thing that we saw in Ziva's trade, divergence and a higher divergence. Now we're just waiting for the triggers to roll up. So we had that same kind of pattern, but usually with divergence and higher divergence, you can almost bet money that we're going up. So probably this is your new target at 79.20. That would be my guess. So again, look, as we start to look at both charts together, again, we're not going short. Everybody okay with that? Our large triggers are still crossed up, so we're not going short. We're waiting for, if they can freaking muster the strength to do it, waiting for this to kind of give out just a little bit, and then maybe we'll go up. This is where they sucker everybody in, and you're like, hey, I'm going long, I'm going to be first. You guys ready for more chart reading? I want you to answer the question because you get to be a better trader when you answer the question. How many triggers are above the fib? Okay, good. We have news coming out. Okay, so answer this question real quick. Just as a number. 1, 2, 3, 4, 0. What's the number? How many triggers are above that fib? So you're not going long yet. No matter how much you think it's going up, you're not going long yet. If the answer was 2, at least, you could think about going long. I'm not saying that it won't go up. But this is not the look yet, still, that says we're going higher. If 0 triggers are above a fib, what do we say in our material? So look, let's go back to our termination conditions, and let's use this one chart and say, after price reaches fibs, check the trigger lines. If they're not below support or above, depending on which way you're going, do not take any trades on the small charts. So do you see this fib down here at the bottom? 0 triggers below it, so no more short trades. This is the real world. No triggers above it, and I'm not saying that they won't eventually get above it, but not yet. So we're still not going long because resistance may hold, even though, look, this is something that confuses new people. The price went above it, right? But we're not looking at price, we're looking at triggers. A lot of new people get that confused. They're like, well, we broke above it. And it's like, no, we didn't. Because we are looking at the indicators, we are not looking at price. Does that make sense? That's a common mistake that a lot of new users make. They look at the price and not the indicators. Now, I'm not saying that we can't go up. I think in all fairness that, again, if we're going to create a breakout to the upside, I'll give you one guess as to where it might happen from. And what's probably going to be our line in the sand. If we're going to make a breakout to the upside, would you guys agree that this spot right here has to be the one to hold in order to make that happen? Right there. Would you guys agree? That's the spot that's going to define whether or not we finish breaking out to the upside or we fail. And again, if it fails, I'm okay with that. If it holds, I'm okay with that too. Now, under normal circumstances, if the small triggers weren't going down, I would say this is a momentum trade long. But, you know, and the reason I say that is for the reasons that we talked about, which was divergence and higher divergence. The odds are that we'll probably get going to the upside, which we did. And again, if you don't have a momentum style breakout trade in your arsenal, then we're just still waiting. So you remember what Ziba's chart had. And again, I'm a big fan of this. Divergence with a lower divergence, you almost always get a trade in the direction of the small triggers. It's very rare that you'll get divergence with a lower divergence with triggers rolling. And again, I think you saw the same thing here. Divergence with a higher divergence. That's expectation that will probably go up. And again, I also said this is the exact spot where something's going to happen one way or the other. Triggers were leaning up on the small chart. So I would have guessed up, but anyway, we're in kind of tight quarters here. Now, life becomes a little bit easier for us because, again, you know, now we're starting to build a story on our charts, chart reading. Right? And the story is we're not going down. Right? I want you to see this. Look. I want you to go back on this chart to the last time we had a second lower divergence. So look, right here is the last time we had a lower divergence. Everybody understand what I mean by a lower divergence? Meaning a divergence on the high and then a lower pivot with divergence. And then look what happened after that. Yes, Stephen, is the answer to your question. If I can get a limit order in time, I'll do a limit order. If I have to go in at the market, I'll hit a market order. It doesn't matter. If the idea is to get in as quickly and closely to the spot as possible. Anyway, look, I just want you to step back and build a story. Second lower divergence, and I want you guys to go study this. Because again, look, I think the more you study it, you know, I've taken a lot of pictures over the last, I take a lot of pictures all the time, to be honest. I'm at like 31,000 pictures. Let me find one that I did. So look, I'm going to post it in the room just so I can open it up here. So look, this is a picture that I did the other day. I forgot I think it was on the NASDAQ. But again, look, I watched this not only on my large charts, but I also watched the pattern on my smaller charts. And I want you guys to spend a lot more time finding these on your large and small charts. So look, divergence and then a pivot with a lower divergence initiates continuation to the downside. And I think I had done a momentum short trade in this area from the mid-band. And again, there wasn't a lot of room, but that's okay. But it was the second down divergence that told me that we're going to continue lower. And I've got like 7,000 of these pictures. If you guys have been following, you know, all the pictures that we put in. You know, look, in a given day, this is how many pictures I make, just to give you an idea. So there's a lot of pictures that I make in any one given day. And again, they're not all for you guys. You know, a lot of them are just for me. See if I can find. Anyway. All right, so now we're in a position in crude oil where we have to ask ourselves another question. And again, just trigger line reading only. Everybody agree that the triggers are up and strong and looking like they're going up. So we have to decide, are we going to trade into this little resistance? Do we have the anticipation that we're going to go higher? Right? So we have a pivot stop out and we have resistance. Do we want to trade into it? That's the question. What do you guys think? What's your answer? So we're asking the question right here, should we trade into resistance on our large chart? In the beginning, the short answer is no. Right? In the beginning, the short answer is no. And again, this is where, a lot of traders will add in that third chart and they get some additional confirmation. So watch. You guys remember we used this chart yesterday, the market flow chart? Jose, what do you mean where to enter? I mean, traditionally, you would enter at the area, right? Where do you normally enter a trend trade, Jose? Now, this is going to be very short-lived because of divergence now, so it's probably over, but... All right, let's go through where do you enter since Jose asked the question, and we'll go through the rules, okay? Again, you guys think I'm about to make up something new because I'm in here in the room, and I'm not going to make up anything new. It's going to suck for you. It's going to be the same old thing. So here's what it is. Here's how you enter a trade. Once you've established the correct trigger line configuration, once you're remembering rule number 2, which will deter you from entering into a termination condition, which we knew we had possible termination, so we had to watch it. Okay. So when you're going to enter a position, you're going to eyeball which support lines up with your large triggers. You can even draw a box in that area. If you want to draw a box, you can just hit Control F11, F12. Is it F12? F12, not F11. I wrote that wrong. But you can actually draw a box and say, hey, I'm going to put a box in. Right? And then ultimately, you're going to either buy on the way down. The preferred way, if you don't have divergence on the highs, to put a limit order in at the area. So just put a limit order in right there at the spot and say, I'm going long, and then that's it. Now, you can also do a market order. So again, let's just go hypothetical, say that you were going to buy the area. Everybody with me so far? So you have to tell me where is the large triggers and support. If I drew a box, would everybody agree that the large triggers and support come together right there? I've got a box already. So if you're going to buy, that's the window. Now, when you're only looking at your small chart, you're like, okay, what's going to happen? This is why it's incredibly important to have some type of context on your large chart. Remember when I said we may very well go up to here? I don't know if we will or not, but the fact that we had two higher divergences before we had large triggers leads me to believe that there is a lot more money to be had to the upside. It doesn't always happen. But most of the time it does. Yeah, we got to get out of this area. Anyway, look, I want you guys to get this. And everybody say yes or no, I get it or don't get it. If you have a second lower divergence, the trend is going to be down until they really beat you out of it. If you have a second higher divergence, the trend is up until they beat you out of it by conditions changing and things changing. You just have to believe it. But you have to first learn it so you can see it enough times. And the more times you see it, the more you'll learn it. Let me find, I have a couple of older pictures that I wanted to dig up. Bear with me. I am searching for pictures. Yeah, I've made so many pictures. I had a couple really, really, really good pictures. If you guys want, do you guys want to do high speed work? Again, look, I know crude oil is kind of slow speed work. And again, we need to see a breakout of 84 or else we're not going to break out. Again, look, short-term trigger line reading. What do you see? Everything was up and everything was nice. And then, again, now we've run into resistance again. This is literally our trouble spot that has to break. And again, now the small triggers are down. How many triggers are above this? 0. So that's what has to happen, which I think it will. But that's what has to happen for continuation to the upside, which I think we're going to get. I've already made my case, right, that we're going up to here. We'll see what happens. I'd bet $20 that we're going up, but we'll see what happens. Now, for those of you guys that use a market flow chart, look, this is an additional set of trigger lines that you can use at your disposal to give you an extra little bit of a read on the market. So I want to ask you a question. Can I do this? I don't want to mess anybody up here. I don't want you looking at the dots and all the other crap that's on that chart. I want you looking at trigger lines. So let me put just the trigger lines on here, no market flow, so you don't get dizzy. Somebody give me a read of what the trigger lines say right here. Are we going up? Well, we don't have to do anything, of course, but the lean is to the upside. Would you guys agree? Whenever you're sitting there going, man, I wonder what the hell's going to happen, look at your triggers. Yeah, look, would you guys feel, as far as trigger line configurations go, this is as strong as they get to the upside. Everybody agree? That's as strong as they get. So we should go up. We may not, but so this was your trend trade long buy spot on the other chart. For me personally, I use a 21 range chart on the NASDAQ. Whenever the triggers on all three charts agree, meaning the large chart, dynamic Renko, the middle chart, dynamic Renko, and the triggers on the range chart agree, it's the spot to watch. It's the spot to break. Can I go back to what we were talking about first thing this morning? There's a difference between termination area. Here, watch. I'm gonna put this picture back in because I think it's really worth talking about. There's a difference between an area where you might stop taking a trade or take your first profit and a termination condition that favors that area actually holding. So area isn't just an area, but the condition of the triggers is going to tell you what you need to know about the area. So here we had an area, but the triggers were up strong, so it had a chance to break, which is kind of where we're at right now, right? On crude oil. We're at an area and the triggers are strong and it might break. Now, notice down here at the bottom on this crude oil chart, did we have double divergence on the bottom? No. Now, step back and build your context on crude oil. Now, did we have divergence and higher divergence on this one? Yes. And again, I don't think unless something significant changes, we're probably going up and nothing but up. And there's nothing to make me think otherwise because of what happened before we got to the strong trigger line. Look, does that make sense? Could it stop and go down? Sure. We'll see. I think the more likely outcome is that we're going to break through and keep on going. We'll see. All right, questions. Before I go any further, let me make sure I don't have some charts. Abdul, let's see what we've got. Pre-trend trade long. Okay. Now let's take a look at this. He's using 3 charts, guys. So he's actually using that range chart that we talked about. And again, he took a bit of a chance going short at resistance, didn't pay off. And again, maybe that one's a little bit questionable with the small triggers above the large triggers, but I understand what you were doing. Now, long trade at 69 with a 79 and 83 target. Now, I think the targets, again, he's going for a quick target. So you're done with that trade, right? Obviously, you hit your targets. So he's not going for all of it. He's just going for some of it. Now you can see what we're doing here slowly but surely, right? Over here on this chart, every trigger line is up. And as we kind of anticipated, the double divergence, higher divergence, strong triggers, breaking through a fib, at least 08. I mean, that's your first target. So what do you guys think? Does all this make sense? Again, it's really important to build a context of what happened before you see strong triggers And you see how long it took before there was actually any type of a trade set up? I mean, it took from 8:56 all the way, it's already 10:20. You're struggling in this spot. When you say you're struggling, what are you struggling with? What's the struggle? You don't know what's going to happen? All right. Nobody knows what's going to happen. It's just odds. Okay. So, all right. I mean, you took the long. You just didn't hang in for all the profit. That's the difference. You know, again, you have to kind of weigh out, is it worth risking all of my profit plus some to hang in there? And maybe in that situation, for you, it's not worth it. And that's okay. There will be situations where it's more worth it. All right, I'm going to go back to this crazy range chart, okay? And again, we're just going to look at trigger lines, not market flow or anything else. I want you guys to answer the question, did anything change when we looked at this area as far as the trigger lines goes? This is the key to using the market flow, guys. Not to use the market flow, to use the triggers. Is there anything that changed that said, hey, it's not going to go, or are we still in a really good, strong up mode? Yeah, nothing changed. I think we did a lesson on this yesterday where we said to ourselves, you know, if the small triggers are going up, right? And again, look, it's the same opportunities for going long as for going short when you're looking at a range chart, right? Hopefully you kind of start seeing them and you're like, oh, okay, there's an opportunity maybe for a long with the range chart. Here's an opportunity for a short with the range chart. Here was the other short that happened because of the trend trade that Abdul did short. Here's where the 5-1 chart started to give out and we had multiple divergences, which I think you can see the same thing over here, right? The triggers gave out and we had divergence and 1-to-1s. And then we meandered around here and then ultimately took back off again. And remember we said we'd probably go make it all the way up to the higher areas. And again, I don't know how else to say this except just keep beating it up. The importance of what happened before we got the strong small triggers. I don't know, maybe there was a W or an X or a Y or a Z, who knows what it was, but whatever letter it was. Anyway, when we talk about the range chart and you guys start incorporating the range chart, can I ask you, just does it make any sense when you look at this that these three circles could potentially be a trade, either long or short? Pull back to the large triggers in a fib, pull back to the mid band in the large triggers, pull back to the fib and the large triggers. Are you guys okay with that? So look, these circles, let's look at them on the 13-2 chart. did the 13-2 chart agree with what the range bar chart was saying at the same spot, at the same time? I think so. So again, for me personally, that's why I use that third chart, because if the 13-2 and the 5-1 and the 8 range chart all agree, then you usually get a pretty darn good trade. So we go back to this last circle and we ask ourselves the same question. I already know the answer. Now you know the answer too, right? But did the range chart also agree with what the 13-2 chart said? W or M. All right. Now, the hardest part of this lesson, which, again, to be repeated, this line right here scares the shit out of everybody. Because they're like, oh my God, I can't trade into that line. And then you wait for it to break and you get nothing. Right? You wait for it to break and then you don't get squat because you missed it. Anyway, this is the pattern I want you guys to study more than anything else before tomorrow. Go back on your chart, either the large chart or the small chart, I don't care, and find a divergence that has a higher divergence and tell me how far it goes up. And go back in time and say divergence and lower divergence, and then tell me how far did it go down. And I want you just to scroll back through your charts and you can, you basically see this all day. Obviously we had a bottom, but then a higher divergence pivot. What happened next? The market went up. And then let's just do it again, just for grins and giggles, right? Divergence with another divergence. What happened next? Is it a coincidence that the market goes that far? I don't think so. Let's go find some more. Are you ready? I mean, you could do this all day long, but look, we'll scroll way back on our chart. Okay, this one's obvious. Divergence, lower divergence. What happened is next as we go forward. Divergence, higher divergence, a little bit messy, but does end up going eventually. Divergence, that one's almost too far away. So look, here's one where we had the same look we just had right now, and it didn't go all the way. They don't always go. I needed to find one that didn't go. So here's one where you would say, hey, there's two divergences, I'm going long, and then eventually it gave out. So I just wanted to find one that didn't go all the way, just so you can see it doesn't always go all the way. Just so you don't get a false sense of security. Now, most of the time they go, and that's good enough for me. If you get, 70, so if you step back and look at your chart from 5 o'clock in the morning and you took a long, a short or two, a long, you're really happy. And now we're at a spot where we have, again, this is a termination spot, but it's not a good enough condition to say, we're going to go short. It was a hell of a profit target, which again, we can just go look at some of your trades here and just see what you guys did. All right. So, Alan, you did this two different ways, right? So you took the first trade and you took some money and didn't lose. And then you used what I would like to term momentum. Because the price bars were completely above the small triggers, you felt comfortable buying the breakout, anticipating it was going to go up. Do you guys see what he did here? Now I'm going to add in two pictures. I want to go back to the picture that we talked about earlier this morning from 2015. Remember this one? Where is it? Where we talked about the bodies of the bars being completely above or below the small triggers. I know this is an old picture, but that's the look that some traders will use for some type of momentum look. So do you guys see it? This is from 2015, but it's always been the same. So what Alan did is he put together a bunch of different ideas. He said, because we had a good bottom and higher divergences and we had strong triggers, I'll be happy taking a momentum style long trade if the price bars are completely above my small triggers. Do you guys see what he did? Instead of just hanging on there and saying, oh my God, I hope it breaks, he just waited for all the triggers to roll back up again and then just got back in. So he didn't have to have the stress. And again, Abdul, you said you were struggling in this spot. Maybe this is an alternative for you that you can think about incorporating. Don't struggle at the spot, take your profit, and then if the triggers start to break above it, get back in again. Now, it's not a traditional trend trade, but this is perfectly acceptable. All right, so now I want you guys to answer a question. We're going to do it with just a range chart because you're not used to it. I want you to tell me when this fib may hold based on small trigger lines. Tell me what you think about that fib. Is it going to hold? Yes, no, or maybe? I would say no at the moment. Or not yet, might be a preferred term. No, there's no effing way on God's green earth that fib's going to hold with those triggers. It's just not going to happen. Now, they could meander. You know, they do this a lot around fib areas at the tops and bottoms. They'll chew it up a little bit and then they end up turning over. But for us to go short, we're so far away from going short, it would be easier to get a breakout to the upside. Remember the question we asked ourselves at a fib? We asked ourselves the question, the strength of the triggers and location of the triggers. So again, I'm kind of locking this in so we can talk about it. So here's your fib, right? Now, location of the triggers first. A lot of the trigger lines are above the fib. Can we all agree to that? Now, the other thing that you're going to notice here is that the momentum is not quite as strong as it could be. So you're going to notice that the small triggers are physically located in between. It's a weakening look. So a lot of times you'll see this happen at a fib where they overrun and they get a little weak, and then they eventually go back down. I don't know if they will or not. We'll see. Time will tell. Now, if these triggers were really strong, meaning, bear with me. I'm glad I can do all this with my NinjaTrader and not take it down. That's pretty cool. All right. So look, if my triggers were strong like this, where the smalls were physically outside the large, then that would be a bit of a different look. But right now, we don't have that look. What we have is small triggers are physically inside of each other. And again, whenever you're thinking about, should I buy a breakout? This strong trigger line look is the answer yes. This weaker trigger line look is the answer no. Most of the time. So if we were to only look at our small chart, do you see any reason for the market to stop, really? I don't see any reason for it to stop. Now, it could. All right, I'm going to put all my goodies back on there real quick, okay? Just so we have all of our indicators. Because we're still at resistance on the large chart, even though we're a little bit past it. Remember I had that little lesson yesterday where I said a fib is an area. It's a range. It's not just an exact price. Although we like to think of it as an exact price, it's still a range. And again, whenever there's a, Fibonacci resistance with weak triggers, long trades become more difficult. Yes. Well, it's a stop taking long trades for sure. Now we have to decide, is it time to go short? Right? Do we have enough of what we need to actually start taking short trades? Or are they just going down a little bit further before they go up again? So right now, let's just read small chart by itself. Everybody agree we're at a blue fib? Oops, sorry. So ask yourself that same question. How many triggers are below that blue fib? None at the moment. Now that may change, right? This is a very classic overrun of a fib by just a little bit. Overrun of a fib with weak triggers, with divergence on your small chart. All right. Now, could I bring the range chart back in just for fun? We finally are starting just to get the small triggers to roll over. It feels like. All right. They do this all the time. You know what's going to happen, don't you? Look, I could draw out the future for you. They're going to go down to here, and then they're going to bounce all the way back up to here, and then they're going to make decisions. That's what's going to happen before it happens. How do I know that? I've seen it once or twice. So down to 84. And then back up to 1920, and then we'll make decisions. You guys have seen this with Mark enough, right? It pulls away the large, again, we're not going short with this look. And the reason why, do you see where the large triggers are located? The large triggers are physically above the red fib. That's not good for shorts. Not saying it can't go down, because it can. But traditionally, that's not the best place for shorts. I'm going to load up my market flow chart again. So again, this is where I need to see what my market flow is doing. But is it tradable? The market goes up and down every single tick. Every tick is tradable. If you have a rule for it and you're consistent and you win, you could trade every tick. Is tradable. What trade would you do, Gary? Just let me know, what trade would you do? I don't know. So, D, this is why when people look at indicators without thinking about the rules, they get screwed in the brain. So look, let's go over the rules for what you're thinking before we start looking at indicators, okay? So you're thinking about some type of high volume area trade or something along those lines, right, D? So this is my rules, but we could pull up the rules. But the rules in the plan say what? This is the first rule. All charts must agree that a top or bottom is true, meaning a good top or a good bottom. Look, we had one of these yesterday. I took the trade, but. So look, can you guarantee me? This is what I want you to be able to say. Can you guarantee me that with these triggers and the market turning from right there, that's an absolute top for sure? That's the best look you can ever get. You know damn well you'd bet a left finger on it that that's the top forever. Is that the best top you can ever come up with our software? I don't think it is. Oh, man. Are you freaking kidding me? All right, guys. I'm going to take a couple minute break here because I did something wrong and took down my Ninja Trader for the first time in 5 days. So I'll bring it back up, but I wanted to get my log files. I did tell you guys that there's still a 1% chance that we can take it down, and it did. Bear with me here 2 seconds while I reboot my screen. All right. I need to figure out what happened real quick. Can you guys see my charts here? Just want to make sure you guys can see them first. Now, D, the answer to your question is you can do it. look, and again, look, this is where, like, we have some traders, MB is one of them. He'll say, if we stop and pause or start to make a signal here or something, it's good enough because, look, remember how we said we anticipated the market getting down to this area, which was the mid-band on the other chart? So again, a lot of times you'll get an initial pullback into a high volume area at a fib, and you'll get that first short, but it's not high probability. Does that make sense? It's just like a trend trade. There's high probability trend trades, and then there's not so high probability trend trades. This would be a medium to lower probability high volume trade. And I'm not saying it can't work. I'm just saying it's not the best. Right? So, again, whenever you see triggers physically past a fib, remember the question we asked ourselves? Because you're talking about this fib right here. Where are the triggers? Are they below the fib? Or are they above the fib? This is how you know you're just about to get screwed out of your money. When you go short and the triggers are on the wrong side of the fib, you're probably going to lose. That's a pretty easy rule, isn't it? Make sure that your triggers are on the correct side of the fib you're trying to trade. Because usually they go break out or they run the highs again. Case in point. So you see what I'm saying? Triggers above the fibs, they usually keep going. And again, sometimes they just stop out the high and then they go back down again. But so D, does this make a lot of sense to you? Again, in the rules, just from, the user guide. Let me find them. I closed it. The very first rule is you must have a good top or a good bottom. The rules, when you say not really, okay, let's go through the rules together. This will be easier. Tag limit. We'll slow it down a little bit. I'm slowing it down. I'm making a picture. Okay, so look. This is the rules from the plan. Everybody agree? We're cool with this? So look, rule number 1 states you must have a good top or good bottom. And again, watching the good top, good bottom video is the way to know that. And it also says in the rules, make sure that the T3 trigger lines do not break beyond the area. It is extremely important that you pay attention to the trigger line location when doing this trade. So while it was tempting for you to do a high volume trade, you see how the triggers are literally above that area that you're trying to sell? They're not helping the area, they're beyond the area. So that's how you get basically run over and slaughtered, and you're like, what the hell happened? And you can see the same thing on your 5-1 chart too, right? Which we were looking at it before it happened, but when it was over here, we were saying, notice that the trigger line location is way above the fibs. It's probably going to break. And now, again, they went and stopped everybody out who was trying to go short. And again, we'll see what happens, but we're still not going short. Now, they have a little better chance of making a deeper retracement this time. We'll see. The second time up always has a better chance of making the full retracement. We're kind of getting into no man's land here on crude oil, where, you know, if they don't really stay above 19, there's not going to be anything to do. I mean, I would say that's kind of a line in the sand right there. If they get back below it, then there's a good chance we'll see some lower prices. Anyway, I want you to look at the triggers over here. And again, do we see a trigger line configuration that looks super positive for going long? Not really. The small triggers are below the large triggers, which traditionally is not very strong for going up. They can go up, but it's not traditionally very strong. Alan, you keep saying that. Who freaking knows? Maybe your settings are different than mine. That would be my guess. Your settings are different. Now, what settings do you have that are different? I have no clue. Nor will I be able to digest it. You can go to tech and try to figure it out, but I have no idea. Nor am I going to try to figure it out. You're more than welcome to go back and okay. Bear with me here. I need to send something over to my programmer. All right. Sorry, I got a couple of messages I had to. I just got to catch up on a couple of messages here real quick. Okay. So anyway, look, we're stuck basically in a situation where, you know, we don't really have anything great going on here in crude oil. Do you guys want to play NASDAQ? You do? Okay. I'm cool with that. I need to go grab another cup of coffee before we do that, though. So what I'm going to do, let me open my NASDAQ charts here because I didn't have any open. Let me open them up, and then we'll play NASDAQ. And then, you know, if you guys want, I'll give you some hints and tips and tricks and things on the NASDAQ that will probably save your ass a whole bunch of losers. And I had to take all these losers to figure them out, by the way. So it's not like, you know, you don't learn about the NASDAQ without a pound of flesh or maybe 6 pounds of flesh. Everybody who starts learning to trade the NASDAQ puts in their pounds worth of flesh and frustration. And I mean, I literally haven't thrown a monitor through a window in a long time, and the NASDAQ will get you to that spot. So you have to really be careful with which trades you take on the NASDAQ and under what conditions. So what I'm going to do first is I'm going to have my charts up here, and then I'm going to take just a 3-minute break or so, and then I'll be back, and then we'll get down here. Look, I love the NASDAQ, but it took a couple weeks before I started to like it. Took a month and a half before I started to love it because you have to work through the little details. Look, it's the same rules and the same everything else. You just have to be better at what you do. If you are a not great trader, stick to crude oil and the S&P or maybe even gold, but don't do the NASDAQ. As you get better, then you can start incorporating the NASDAQ into what you're doing. I did just get a message from my programmer, which is a freaking awesome message. He says that he has solved another issue and he has fixed and optimized our code, and it now opens 3 or 4 times faster and runs faster than it has. So that's good. So we're going to have another upgrade before it's all over soon. When they're done doing what they're doing, we're going to have bigger, better, faster. So these are all really, really good things, good news. Before can we check the S&P? Send me a picture, Bradford. I don't have the charts open for it. I'll open them when I get back. I've got to go talk to the man about a thing real quick and get a drink. I'll be right back, and then I'll go through whatever you want. We'll look at crypto. We'll look at gold. I don't care what you guys want to look at. We'll look at it. So just give me a minute. I'll be back, and we'll get it done. So be back in just a couple minutes. All right, guys, I'm back. Can you guys hear me okay? Just making sure. I know some of you can, and I don't know what happened to Discord today, but thankfully we've got the YouTube going. All right, so the NASDAQ. Lately it's been a little bit choppy, believe it or not. I know that seems a little bit weird, but the NASDAQ is one of those markets that is very, very, very good at momentum follow through. Sure, Mike. Be more than happy to. Let me catch up. There's a couple of charts that I needed to catch up on real quick. Alan, let me see what you did here. That is busy. All right, so you... Alan, do you want me to comment on all of these? It's hard. I mean, I can't see all of them, but it looks to me like you were going long, jumping in and getting out, jumping in, getting out, jumping in, getting out, going short, jumping out. Kind of all over the place on this one. That's crude. But, here's the thing. If you find yourself doing 37 trades, you're not right. There's usually not 37 trades. That's a good sign to start off with. This is the NASDAQ picture. I just want to make sure that I'm doing this. Bradford, this is your picture. All right, so going long at support with the NASDAQ going up is a good thing. Divergence from a resistance with the triggers going down and short is a good thing. You went long before everything had rolled up. I know you kind of did it over here, but the large triggers were up over here. Both triggers were going down and you won. Both triggers were still going down and you lost. Both triggers were going up and you lost. Large triggers were going up and you lost. Both triggers were going down and you won. Can't tell where you got in exactly. And now large triggers are going up and you went short. Okay. All right, Bradford. I had to marinate on that one for a second. So, again, let me make a picture here. And again, I think a lot of what you're doing is really good. There's a couple of things that are obviously going to get you. So there's one rule that we've had for a long, long time. I actually wrote a book. Here, I'll give you a copy of the book. I'll put a picture in for you. The book's really a joke, but it's how to commit financial suicide in one easy step. And the first thing is go trade against strong triggers going in the wrong direction. That's the number one way to commit financial suicide. Trade against strong triggers going against you. So when I look at your chart, the first thing I'm looking for is, right, this is where both trigs are up and you get slaughtered. So that's to be expected. The other one is you went long over here while both triggers were still going down. You were trying to jump the bottom, basically. And this is the same situation. You went long with both down. And you're trying to jump the bottom, which I understand what you were doing. Which I'm never, I'm not really bad against, but usually once at least one of the triggers rolls, which it did over here, you just kind of got stopped out. And then, this is another situation where you went short, but you kind of did it into support. And again, this is where, we had talked about this in some of the work we did just a little while ago. When you look at the location of the large triggers, still going up, right? So large trigs going up still. Support tends to hold. So you basically went short right here into support when the large triggers were still going up. Which that same short would have been, you probably weren't around, but the same short would have been good over here. And then today you went short with both triggers going down, which works out well. And, this is another one I'm going to guess 50-50 on whether you won or lost, because you're trading into support with large triggers up. You see what I'm saying right here? So you're going short hoping that we get below this area, instead of waiting for it to get below the area and then go short. And it might have gone down. I like lots of divergences up there, and maybe that's why you were doing it. But still, just because you had multiple divergences doesn't guarantee it's going to go down. It means it might go down. But do you see what I'm talking about right here? Trading into that is very, 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 very difficult. Well, some people will still go short when the background color is green or crash. Right? Like, for example, in a strong trend where they're trying to get in right here, anticipating because of a larger chart that we're still going to go back down. So some people do it. But generally, when the background color is not the right color, it's more of a continuation trade. All right, let me get back on track on what I was doing here. One more chart to go through. Mike, let me go through this. So let me make sure I understand what it was you were saying. You have a chart. This in class, not a good trade. I'm trying to understand what it is, Mike. You took a trade, a trend trade long. And the market did basically the same thing it did in the video. So I'm trying to figure out what the problem is. Mark said small triggers down was not good to take the trade. Well, here's the thing. That's not. You have to understand two things, okay? With the NASDAQ, sometimes you get your ass handed to you when you go short against small triggers going up. So let's find an instance here. there's not a lot of instances today, but so let's just say hypothetically, okay? What he says is that if you go short and the small triggers are going up, sometimes it's a little more difficult. And the market goes a little higher. So what he was suggesting is waiting for the actual down bar and paying a little bit extra. Instead of getting in on the way up, getting in on the way down after a down bar. So you chose to get in on the way into the area, which is totally fine. But I think you read too much into it. The only thing that you don't really want to do in the NASDAQ is trade into termination areas. And if there's any reason whatsoever that your trade might not work, like divergence, don't go short after the small triggers start going up. So let's just say hypothetically, for example, again, we had a termination at the bottom, so this is not the best example. But if you were trying to go short right here, what he's saying is that if the small triggers are really strong and pushing against you, it's better not to go short against strong small triggers that are pushing really hard up into you. Does that make sense? See how they're right on the bars and they're really pushing hard? I think that's the look he's talking about. Just because they roll down doesn't really... So let's say you were going long because of the termination at the bottom. Because they rolled down is not a big deal. They're not pushing really hard into the spot where you're trying to go long. Well, there's different scenarios, and that's where the context of what happens before you take a trade is so important. So let's talk context on this chart. Okay. So if you look at the bottom, I think, can we all agree that we're not going short anymore? On the NASDAQ, we had a pivot stop out at a fib with the second divergence. We're not going short. Is everybody okay with that? It's a termination condition long to go to the upside. Now, whenever you have a strong termination condition on the NASDAQ, those are the times where traditionally I like personally the momentum style trades to the long side. I don't know about you guys, but, trend trades are great. So, but we haven't had a trend trade look to the upside. Now we're in a situation where we could have a trend trade long look. Would you guys agree with that? We had a good bottom. We have strong triggers. So if we get a pullback, we would see a trend trade. Right? Now, for me, because of the quality of the bottom and just the nature of the NASDAQ, I like to be a little bit quicker. For me, look, remember the pattern I told you guys about that makes the market keep going? What was it? I'm going to see who remembers it. What's the pattern that makes the market keep going? In the opposite direction. Higher divergence. All right. So let's look at this. So let's take this into two different pieces, okay? Piece number one is what happens on the large chart. And again, yes, you should be buying some type of pullback on the NASDAQ if you're wondering. But look, this is how you start building things together. So look, at the low, let me use a brighter color because that sucks. Hang on. There you go. You guys can see that, right? So at this low right here, I'll put 3 arrows on it. This is what's called our pivot stop out, right? Pivot stop out at divergence, at fibs. There's pretty much everything on the planet right here that says we're going down. And then on the smaller chart, you have a pivot stop out at the same spot, followed by a higher divergence. So this is not only pivot stop out of the low, but it's also higher divergence after it. Now, there's one more piece of the puzzle that I think you really need on the NASDAQ, and that's the small triggers getting above everything else. So you have really 3 or 4, can I give you guys a picture of this just so you have it? So you have 3 or 4 different reasons why, number one, we're not going down anymore. Pivot stop out of the big chart, pivot stop out of the small chart, followed by the higher divergence. And then when you get into, well, there might have been your trend trade. When you get into the smaller chart, you have to ask yourself, can you go a little before? Hang on. I hear some kind of freaking beeping that is killing me. Hang on a second. I thought I had every notification off. Hang on a second. Okay. All right. So look, for me, this is the moment in time right here after this divergence that tells me that it kind of confirms, if you will, the larger chart saying, you know, we already kind of got a confirmation of the larger chart pivot stop out when we got a smaller chart pivot stop out. But for me, it's this pattern right here. It's the next higher up divergence, and it's the small triggers getting above all other triggers, and then that's where I start looking for some type of momentum trade. I mean, I'll do trend trades once the large chart rolls over, but you end up with a lot of momentum trades first on the NASDAQ, and then ultimately we just had our trend trade. What do I like better for a strong bottom? Yes, P. I like all that. It's like saying, would you rather have, look, I'm going to give you $1 million. Would you rather have $100 bills or $50 bills? Who gives a shit? It's still $1 million. You know, blonde or redhead or brunette. It doesn't, you know, whatever. So look, brunette personally. All right, I'll leave it at that. My wife's about to come in here and kick my ass. All right, so look, this is, like we said, you know, look, there's 2 opportunities for momentum longs if you really believe in the bottom and you have some rules for some momentum trades. If you're only doing trend trades, you just had your trend trade. Did you guys take it? Alan, let's take a look. NASDAQ, trend trade long. Okay, you have a fib there on Ninja 7. All right. And again, you took a really quick target. There's damn near never a situation on the NASDAQ where they don't give you 7 to 10 points minimum when the triggers are this strong. You know, and then you're going to look up later and the market's going to be up here and you're going to be like, man, why did I take 4 points? You ever get that feeling? Yeah, it takes a little bit to get used to. Anyway. Now, for me, and again, look, trend trades are great, but I think momentum trades are just as good. I want to go back to the rules in our trading plan. Remember the rules that I was telling D about with the high volume trade, which is to have a good top or good bottom first? So let's look at the rules again. Number one rule for a high volume area trade is you must have a good top or good bottom, and you must not have any trigger lines past the area in order to start thinking about a high volume area trade. The same thing is true for a momentum style trade. You have to have a good top or bottom on every chart that you have. Right? So if you're running a market flow chart too, you want that chart to also say good top, good bottom. And then don't trade into trouble. And again, I'm a fan of the market flow chart. You guys want to look at the market flow chart from the bottom? And again, I think you'll see that it says the exact same thing that all of our other charts said, which was, you know, divergence from the bottom, the trigger lines rolled up, and, you know, again, if I'm going to do some type of momentum long trade on the NASDAQ, is it better without the market flow here? Hang on a second. I can't stress to you guys enough not to worry about all the dots and crap on the market flow first. The more important thing for you guys is that the trigger lines are with you. Come on. Slow calculations. I wanted to get rid of my market flow on here real quick. And I didn't. Oop, my bad. That's why it took so long to run. Hang on a second. Remove the market flow. Okay. That'll run a little faster this time. All right, so just trigger lines. Would you guys agree, without the benefit of any other charts or any other information? Watch, I'll even go further. Take the Pro Trader off of here for a second. Do the trigger lines favor what we were thinking about, which was a good bottom confirmed by higher divergence on the other charts, and then the trigger lines favoring us taking more long trades? Now, can I give you guys a simple rule? Alan, you ready? Assuming you're going to use the 21 range market flow chart, because I see it. If it doesn't close below the small triggers, stay in for a little more money. That's the most simple rule on God's green earth you're ever going to come up with the NASDAQ is if... Okay, I'm going to digress one more time because I think all these lessons just kind of keep wrapping into each other, which is... So this lesson from 2015, remember what we had talked about, which was wide small triggers with the bodies of the bars below it. Wide small triggers with the bodies of the bar below it. And then eventually the bodies of the bars get inside and above, and then that goes the other way. So it's the same thing. Let's say you're long from the low. You don't want to get in and then get out right here, because nothing in the bar structure versus the trigger says take 4 ticks profit. So I want you to look at the bars versus the triggers. So when you look at this spot right here, Alan, bars versus the small triggers. Is there any bar that's even inside of the small triggers yet? No, we don't even get really a bar inside the small triggers until we get to right here. I mean, literally, it just doesn't happen. Now, obviously, this was our other trend trade. And again, just looking at the triggers, we're going to ask ourselves, at what point do they start to weaken? And again, now, this is where they start to weaken a little bit, but we're still headed in an upward direction. You see how we're finally weakening the triggers? I mean, now the smalls are getting inside. And Alan, you bought what price? Let's look at it again. You bought $36.75. So $36.75 is right here. If you were able to just, again, maybe the prior high you can take half off, which is always a good thing, right? At a prior pivot stop out. So Alan, on your chart, don't get out of anything until right here at least. Nothing said down, right? I understand you had a small trigger there, and I understand the thought of, ooh, if the small trigger stops it, then I'll at least have a little something. But again, it's really hard to kind of hang in there and wait for that profit. That's one of the hardest things, I think. Once you start getting the right trades, then the second hardest thing is hanging in there until it starts to get weak. So look what happened. We run up. Finally, the small triggers get inside. Now we start making some down bars, and that is probably short-term into the trend. See that? So again, maybe a little more, profit potential in there for just reading the triggers and just a little relaxation. Now, it just so happens that the triggers weakened at, right? So I was wondering what happened up here. So again, the trigger started to weaken on the range chart at the exact same time we were at a pivot stop out on both of our charts, right? So we got to a pivot stop out on the 34.5 chart. And at the same time, this looks very familiar, doesn't it? Now, I don't think that one's going to hold. This is the type of pivot stop out that's going to end up breaking and keep going up probably, but we'll see what happens. Tell me if this is not almost, or at least extremely similar to what we had at the bottom. We had a pivot stop out on the large chart. At the same time, we had a pivot stop out on the small chart. Now, I do have to say, I'm going to take a wild guess and say we'll keep going up. But you really can't take any more long trades, right? You could take long trades until you get to this spot, and then once you get to this spot, you just can't do it anymore. Even though it's, look, it's probably still going up, and it's probably going up to the next fibs. It just becomes a much more difficult buy after a termination. So let's go through. I'm going to give you guys. Did you guys get a copy of this? I put this together. It's a checklist for the NASDAQ. And you're going to find it's hurtfully similar to the 5-1 trend change, 5-1-13-2 trend change. So you have a trend trade that's the exact same as 5-1-13-2. It just uses different charts. The only difference is that I have the third chart, and the 21 range small triggers have to agree with the trade on the NASDAQ. That's my, has to agree. Now, the other thing, you know, again, I think you'll make more money doing these trades than you will trend trades on the NASDAQ. You have to really work on your momentum and high volume area gain if you're going to trade the NASDAQ. Momentum trades, by their very nature, are easier than trend trades because everything's already going your way. And if you lose momentum 1 or 2 bars against you, you're out. So it's very simple. It either keeps going or you're done. So, but again, the rules are the same as what's on the plan. Every chart must agree that a top or bottom is true. Now, this is an ambiguous statement for new users. But do you remember what we defined as why it was going to be the bottom over here? We had a small chart, had 1 divergence, 2 divergences, and then then the small triggers. So there's really a 4-step process that kind of happened. It's good. And again, it's not a traditional type. More assertively at either the mid-band, or scarier for you because you're not used to it. But the quality of the bottom is the key to every momentum and or volume area. The quality of the top or bottom is the most important thing before you start doing trades going the other way. Just like right now, we don't have a quality top in any way, shape, or form. My guess is that we're going to keep going up because of the quality of the bottom. That this little minor snafu pause in the middle is, you know, I already drew a line where we're probably going to end up, or a box. Now, can you go long after, right? The answer is yes, you can. Right. Without the benefit of a small chart, is everybody okay with the idea of the good bottom? Do I need to describe why it's a good bottom? Again, good bottom is not a good bottom at the bottom. A good bottom is a good bottom after the triggers roll. I'm uploading this video watch list. The very first video defines what a good top and bottom is. I'm cutting out. I can't do anything. All right. So can I ask a question? We knew the NASDAQ was going up, and we knew maybe it's going to go to a bunch of big red fib lines. What is it going to take for it to be a top? Because they're not stopping. So we're not going to have a top yet, right? Everybody agree with that? I mean, there's just no freaking way it's going to be a top. So here's my question. Can you trade a breakout? Do you get in at the top of the breakout, or do you get in at the bottom of the breakout? Or a potential breakout? If you've got the range chart, we'll see what happens. It's hard to believe sometimes that the NASDAQ will keep going, but it does. When the triggers are strong and you're outside the smalls on the range chart, It keeps going. And, you know, again, this is why on the NASDAQ, I actually run my 21-3 triggers. So watch, trigger lines, go to template, go to load, 21 range small. I actually run those on my NASDAQ chart so I can see what my range chart small triggers are doing. Can you guys hear that? I'm hoping you guys can hear that. Anyway, for me, it's a real good visual of, hey, you're on the right side, hang on. Which we just went through this. No, I said if the price bars are still above the range chart small triggers, it usually keeps going. Above, it keeps going up. Below, it keeps going down. In the NASDAQ, it's one of those markets that has a tendency to really run, and you know, when it's running, it runs, and when it stops, it usually stops really, really quickly. So look, you can see we've kind of gotten below our 21 range triggers, but we still may have one more good push to the upside coming, at least. Here, I'll show you my range triggers. There you go. Maybe that'll drive home the point. Got it? All right. So again, we're in a situation where we have a strong trend on the NASDAQ. And you know, again, we have to ask ourselves questions. Where, assuming that we go down a little bit, how far down could it go? And then assuming we're going to go back up, you know, let's just say hypothetically we go back up from a trend trade long spot. Right? I'm not the biggest fan of trend trade longs when we're on the wrong side of the triggers. So I think this spot right here literally is do or die. It has to either go up right now or it's not going to go up much more. Yeah. Now, I may be cheating a little bit on why I say that. What do you guys think about the possibility of maybe one more up? We'll see. All right. Questions, questions, questions. All right, Elvis, that's yours. That's fine, but it's not you, it's me. All right. Look, we've got about 15, 20 minutes left. I want to open it up for questions because anything that you guys would like to cover, any questions you have about trading rules, you know, and I think, you know, again, I say this with all humility. The rules are really easy. Once you have really solidified locking in your read of your trigger lines along with your areas. If you read your trigger lines and your areas wrong, you're going to end up doing a lot of trades that you shouldn't be doing. If you read them correctly, you're going to end up doing a lot of really great trades. All right. Let's take a look at what you have. So this is your 55.8 chart on the NASDAQ. Okay. And what you're saying with this chart is we've run into a possible termination spot at 86, 87. All right. Nothing wrong with that. You know, had you have been, you did get long, and had you have been long up to that spot, you'd be done for the day, right? That's interesting, Claire. I don't know what that is. All right. Yeah, I'll delete that. I don't know what that is. All right, guys. So look, I'm open for questions. Questions, comments, concerns. You struggle trying to get in at this area. Let's take a look at it. All right, Sophia, can I ask you a question? Why would you want to go into a trade here? What trade are you thinking you should be doing in that situation? What would you call it as far as put a name on it? What's the name of the trade? Call it trend, HVA, or momentum. Which one would you want to call it? Okay, so let's go through the rules for a momentum trade real quick. Fair enough? I'll take a picture so we can blow them up and you guys can see them bigger. All right, so rule number one, you must have a good top or bottom without any trigger lines above your Fibonacci top. Fair enough? So let's look at your picture first. I'm trying to find the price. Okay, so here, I'm going to do it this way. Would you agree with this? I don't think it's short. I don't think it follows the rules. Now, that's enough to stop it, but let's go a little further. Number two, do not, under any circumstances, trade directly into a Fibonacci area that has the potential to reverse the market. So if something's in your way, you can't do a momentum trade. So I think, and you tell me if I'm mistaken, but what do you think about that? So your triggers are above a fib, and you have a green mid-band and blue support on this chart. We'll call it a fib. We'll call it red. And you're wondering how to go short into a green mid-band with triggers above the fib. That's not a good momentum short. So we'll go back to the bottom we had over here. So again, if it was me, right, so let me just, I think I like blowing up the pictures a lot more so you guys can see. So for me personally, this right here tells me that we've got